Are you looking to step into the world of options trading? This year, 2023 presents exciting opportunities and challenges. But don't worry, we've got you covered. In today's episode, we'll decode the basics of options trading, and by the end of this video, you'll have a solid foundation to get started. Excited? Let's dive in. Options trading. Some say it's a gamble, while others claim it's a sophisticated way of hedging and generating income. But what is it exactly? At its core, options trading is the act of buying, selling, or writing an option. It's a financial instrument that derives its value from an underlying asset, usually a stock. Imagine you see a house. You love it, but you're not yet sure if you want to buy. So you speak to the owner and agree to pay a small amount to reserve the right to purchase it at a fixed price for a specific period. If you decide to buy, great. If not, you lose only the small fee you paid. That's the essence of options. Before we continue, if you're finding this insightful, do consider hitting that subscribe button below. It helps us keep bringing you valuable content just like this. Let's talk types. There are two primary kinds of options. 1. Call options. It gives the buyer the right, but not the obligation, to purchase an underlying asset at a predetermined price on or before a specific date. 2. Put options. This allows the buyer the right, but again, not the obligation, to sell the asset at a predetermined price on or before a set date. Why trade options? The reasons vary. Some traders are attracted by the potential for high returns, while others use options as insurance against potential stock price downturns. Another reason is leveraging your position. With a relatively small investment, options can allow a trader to control a more significant stake in an asset. Of course, with great potential returns come great risks. It's not uncommon to hear stories of traders losing their entire investment due to unforeseen market moves. Hence, education is your best tool. Understanding the nuances, terminology, and strategies are critical. Now, you might be wondering about the strategies. There are many, from basic to complex. Some of the most popular are 1. Covered call, where you own the underlying stock and sell a call option. 2. Protective put. You own an underlying stock and buy a put option to protect against a price decline. 3. Iron condor, straddle, and butterfly spreads. These sound complicated, but with time and practice, you'll master them. Remember, the key to success in options trading is staying informed, practicing with small amounts initially, and keeping emotions in check. Embrace continuous learning and keep yourself updated with market trends. Options trading is a fantastic tool if used correctly. It can be a profitable venture, but as with all investments, it requires careful strategy and constant vigilance. So if you're ready to embark on this journey, equip yourself with knowledge, stay updated, and always be cautious. Now, after our basic overview, it's essential to understand that the world of options isn't just about buying and selling. It's an art, an analytical game that requires a strategic mind, understanding of market psychology, and the ability to adapt quickly. Let's dig deeper. The mechanics of options. When we talk about the price of an option, we refer to its premium. This premium is determined by several factors, the most prominent being the underlying asset's price, the option strike price, the time remaining until expiration, and the asset's price volatility. The relationship between these factors often uses complex mathematical models, like the Black-Scholes model. But for now, just remember that options value is not static. It changes with the market. In the money, at the money, out of the money. These terms describe the relationship between an option strike price and the current market price of underlying asset. 1. In the money or ITM. For call options, when the underlying asset's price is above the strike price. For put options, when the asset's price is below the strike price. 2. At the money or ATM. When the underlying asset's price is equal to the strike price. 3. Out of the money or OTM. or call options when the asset's price is below the strike price, or put options when it's above. But options trading isn't just about picking an option and hoping for the best. Successful traders employ strategies, each with its own risk and reward profile. Hedging. At its core, hedging is about protection. Investors use options to hedge their portfolios against unfavorable market movements. By owning a mix of assets and options, investors can limit potential losses. For example, if you believe a stock you own might fall in the short term, buying a put option can help offset potential losses. Spreads. A more advanced strategy, spreads involve buying and selling options of the same underlying asset but with different strike prices or expiration dates. The idea is to minimize risk by offsetting potential losses from one option with potential gains from another. Collars. If you own a stock and are worried about a short-term decrease in its price but don't want to sell it, a collar might be the strategy for you. It involves holding the stock, buying a put option, and simultaneously selling a call option. Options and tax implications. Here's something beginners often overlook: tax implications. The tax treatment of options trading can be complex, especially when you exercise options or when they expire. It's always wise to consult with a tax professional to understand the potential consequences. Practice before diving in. Paper trading is an excellent way for beginners to practice without risking real money. Several platforms offer virtual trading environments, allowing you to hone your skills and strategies before you invest your hard-earned cash. Stay updated. Options trading is not a set it and forget it type of investment. Staying updated with global news, company performance, and market trends is crucial. An unforeseen event can significantly impact the market, so being in the loop is key. Options trading, as you've seen, offers a world of possibilities for savvy investor. Whether you're looking for hedging, leveraging, or income generation, options can be a valuable addition to your investment portfolio. But they're not without risk, so equip yourself with knowledge, practice regularly, and always have a strategy in place. To all viewers, remember, the market always presents opportunities. It's up to us to seize them. If you found this deeper dive useful, please hit that like button. And for those who haven't, do subscribe to Market Matters Media for more insights into the world of trading and finance. Until next time, stay informed and trade smart.